Hello, and welcome to the World Battery Metals and Mining News for the 25th of July, 2024. Cash-hungry Canadian miners test gray area of anti-China M&A rules. Nearly 2 years after Canada implemented restrictions on foreign investments in its mining sector, aimed at curbing China's influence in the global critical minerals supply chain, mining companies are now probing the boundaries of these regulations. Although the rules were intended to limit foreign state-owned entities' stakes in Canadian minerals, the government has not specified precise thresholds for allowable investment. Since the imposition of these measures, at least 9 mining deals involving Chinese firms have been proposed, reflecting the urgent need for funding among small and junior miners who find it challenging to attract domestic investors for costly, long-term projects. Notably, Montage Gold Corp recently accepted a $57.3 million investment from China's Zijin Mining Group, a deal that is being scrutinized to understand potential regulatory responses. This comes on the heels of Solaris Resources Inc. withdrawing a similar deal due to an extended government review. The situation underscores the broader tension as Canada and its allies seek to secure critical minerals for technological goods while balancing foreign investment and national security concerns. Adventus wins ruling on environmental permit, but Silvercorp deal remains in jeopardy. Adventus Mining's TSXV ADZN flagship Elmo Curipamba copper-gold project in Ecuador has received a judicial boost after a lawsuit challenging the environmental license was dismissed in court. The legal action, which questioned the consultative process of the Ministry of Environment, Water, and Ecological Transition, MATE, was ruled compliant with legal requirements, allowing Adventus to proceed with construction. The group of locals who filed the lawsuit intends to appeal, potentially delaying resolution by 3 to 6 months. This development has complicated Adventus's pending takeover by Silvercorp Metals, SVM, which views the lawsuit as a material adverse effect. Despite the court's positive ruling, Silvercorp maintains its stance, and Adventus may pursue legal action if the merger isn't completed by July 31st, 2024. The El Domo Curipamba project, jointly owned with Salazar Resources, ISXV SRL, is projected to be Ecuador's next significant mine with substantial copper, gold, and zinc outputs over a 10-year operation. Following the court ruling, Adventus' stock rose 14.7%, while Salazar saw a 7.7% increase. First quantum mine not on agenda this year, says Panama president. Panamanian President Jose Raul Mulino announced that the government will not address the issues surrounding the closed Cobre Panama copper mine, one of the largest sources of copper globally, until early 2025. This follows the mine's shutdown in November after the country's Supreme Court ruled its contract unconstitutional. The original agreement granted First Quantum a 20-year mining right with an optional extension, yielding Panama $375 million annually, but has faced criticism for being overly generous. Environmental protests against the mine have escalated into broader anti-government demonstrations. Mulino emphasized that priorities like Social Security take precedence over the mine issue. First Quantum's stock declined by 1.19% following this announcement, and the company's CEO does not anticipate the mine reopening this year. RBC Capital Markets noted that the resolution process is expected to be slow due to the mine's contentious nature. Copper price sinks below $9,000 threshold as metals sell-off deepens. Copper prices have fallen below $9,000 a ton for the first time since April, driven by a global stock market sell-off and pessimism about demand, particularly in China. This marks a significant drop of about 20% since mid-May, when copper reached a record high. The decline is fueled by concerns over rising inventories and weak conditions in the Chinese market. The fall in copper prices accompanies a broader slump in metals, with tin down 3.3%, and zinc also declining. Sentiment worsened after China's recent third plenum failed to introduce strong economic stimuli, despite the central bank's efforts to revive the economy by cutting interest rates. Iron ore prices also dropped below $100 a ton in Singapore, as weak demand and high supply continue to affect the market. Taliban start building road for huge Chinese copper mining project. This week, the Taliban administration in Afghanistan initiated the construction of a road to the site of a large copper mine, signaling a move forward with a delayed project in collaboration with the Metallurgical Corporation of China, MCC. If successful, this project, which has been stalled for over a decade, could become one of the largest in Afghanistan's history, potentially creating thousands of jobs and contributing to the country's pursuit of economic independence. The project, which involves a 30-year lease signed by an MCC-led Chinese consortium in 2008, has faced numerous challenges due to instability and safety concerns. Despite these concerns and Afghanistan's ongoing economic crisis, both the Taliban and China have expressed their commitment to moving the project ahead, which is also linked to China's Belt and Road Initiative. The Taliban have emphasized the need to start practical work without any further delays, while China acknowledges uncertainty on the timeline for operation commencement. Aman Minerals secures export permit for copper concentrate. Indonesia's Aman Mineral Nusa Tenggara has secured a permit from the government to export 534,000 dry metric tons of copper concentrate until December 31st, following the completion of smelter construction by its affiliate Aman Mineral Industry. The company expects to produce its first copper cathode in the fourth quarter of 2024. This permit is anticipated to enhance the company's financial stability, according to President Director Rachmat Makassau. The Indonesian government has banned copper concentrate exports for companies without domestic smelter facilities, but granted export extensions for firms at the final stages of smelter construction. Aman's new smelter has a 900,000-ton annual input capacity with a target to produce 833,000 dry metric tons of copper concentrate in 2024, a 54% increase from last year, backed by high-grade ore from the Batu Hijau mine. Anglo American takes fresh $1.6 billion write-down on UK fertilizer mine. Anglo American, AAL, reported a net loss of $672 million in the first half of the year, taking a $1.6 billion write-down on its Woodsmith fertilizer project in the UK as part of its major restructuring strategy. The company, which successfully defended against a $49 billion takeover bid by BHP, is in the midst of an 18-month plan to exit diamond mining, separate platinum operations, and sell coal mines. Despite lower revenue and profits, strong performance in the copper division helped beat analyst forecasts. Anglo is focused on streamlining operations to enhance its copper, premium iron ore, and crop nutrients assets. The restructuring involves significant cost reductions, though it faces considerable risks. The company also revised its production outlook for De Beers downward amidst ongoing market challenges. Rio Tinto, BYD, and LG Energy show interest in Chile's Alto Andino's lithium site. 12 companies, including Rio Tinto and BYD, have submitted proposals to extract lithium in Chile's Alto Andino's salt flats, according to the state mining company ENAMI. The Chilean government aims to boost lithium production through new projects in partnership with the state. ENAMI's search for a partner, launched in May, seeks financial backing or operational support, with negotiations set to begin after announcing eligible companies on August 19th. Applicants also include France's Eramet, South Korea's LG Energy Solution, and POSCO, and several others from Chile, Argentina, Russia, Canada, and China. Chile, the world's second-largest lithium producer, is focusing on public-private partnerships to advance this venture, with ENAMI and state mining giant Codelco leading the initiatives. Eramet lifts profit outlook on manganese rally, says nickel market tough. Eramet has revised its full-year core earnings outlook upwards due to a significant rise in manganese prices, although the French miner anticipates continued challenges in the nickel market, which contributed to a 27% decline in first-half adjusted EBITDA to $247 million. The increase in manganese ore prices, driven by weather disruptions in Australia, led Eramet to elevate its full-year adjusted EBITDA guidance to €1.2 billion to €1.3 billion from a previous projection of $750 million to $900 million. While expanding its nickel output in Indonesia with Tsingshan, Eramet has faced difficulties in New Caledonia, with its subsidiary SLN suffering continued losses. Additionally, Aramet plans to commence lithium production in Argentina this year, but has delayed further expansion to next year to consider new investment opportunities. Graphite One enters supply deal with Lucid Group. Graphite One has signed an agreement with Lucid Group to supply anode active materials, AAM, for electric vehicle batteries for at least 5 years, marking the first synthetic graphite supply deal between a U.S. graphite developer and a U.S. EV manufacturer. Under the agreement, Graphite One will supply 5,000 tons of anode material annually, with plans to start generating revenue by 2027. The company has chosen a brownfield site in Warren, Ohio, as the location for its AAM facility, which aims to produce 25,000 tons per year initially, with potential expansion to 100,000 tons. Construction of the $435 million Phase 1 facility is expected within 36 months, and the site will eventually produce both synthetic and natural graphite materials, the latter sourced from Graphite One's Graphite Creek project in Alaska, home to the largest graphite deposit in the U.S. Sibanye delays results release as it recovers from cyber attack. Sibanye-Stillwater announced a delay in releasing its financial results for the period ending June 30, 2024, following a cyber attack on July 11 that disrupted its IT systems. The South African mining company has since launched an investigation, bolstered IT security, and adopted a phased system restart to keep operations running smoothly worldwide. CEO Neil Froneman emphasized efforts to maintain employee safety and minimize business interruptions, though the act caused temporary outages and led to manual backup processes in certain areas. The company's U.S.-based Platinum Group Metals operations encountered brief delays, but are expected to resume full functionality soon. As a result of the attack, Sibanye has postponed publishing its second quarter and first half results to September 12th. Brazil government mulls tougher measures and sanctions on Vale, minister says. Brazil's government may impose stricter measures and sanctions on mining giant Vale due to the company's perceived lack of cooperation, Mines and Energy Minister Alexandra Silveira announced. The move comes as tensions rise over delays in securing a multi-billion-dollar reparations deal for the 2015 Mariana Dam disaster involving Vale and its partners, BHP and joint venture Samarco. Since President Luiz Inácio Lula da Silva took office, the administration has increased its criticism of Vale for past dam collapses and insufficient investment in the country. Silveira expressed frustration over the company's lack of leadership following the announcement of CEO Eduardo Bartolomeo's departure, and hinted that potential governmental actions might include changes to Brazil's mining rights rules. Vale, refusing to comment directly on the minister's statements, reiterated its commitment to the reparations. Iron ore price drops further as strong supply, China steel sell-off weigh pulling. Iron ore futures prices continued to decline on Thursday due to robust global supply and China's weak steel market, though signs of stronger monetary stimulus limited the losses. The most traded September iron ore contract on China's Dalian Commodity Exchange dropped for a fifth consecutive session, closing down 1.55% at 764.5 yuan, 105th per metric ton. The benchmark August iron ore on the Singapore Exchange fell below $100 a ton, down 1.14% to $99.75 a ton. Concurrently, Chinese steel trading associations are seeking delays in new quality standards for rebar after panic sell-offs pressured the market. Steel benchmarks in Shanghai also weakened, with rebar, stainless steel, hot-rolled coil, and wire rod all declining. Despite these trends, Australia's Fortescue Metals Group reported record shipments and forecast higher shipments for fiscal 2025. Iron ore prices partially rebounded after China's central bank conducted an unscheduled lending operation at significantly lower rates, indicating efforts to boost monetary stimulus. Additionally, other steel-making inputs like coking coal and coke also saw price drops. Kincora employs space tech to hone in on copper prize. Kincora Copper is collaborating with Fleet Space Technologies to conduct ambient noise tomography and gravity geophysical surveys at its Ningan project in New South Wales. The effort aims to pinpoint new intrusive porphyry systems and key structural features in a regionally significant target area identified with AngloGold Ashanti. The ANT survey, covering approximately 35 kilometers, will use seismic noise data to image down to 1,900 meters, complemented by gravity models. Fleet Space has previously used this technology in the Macquarie Arc, generating a district-scale copper prospectivity map. CEO Sam Spring highlights significant investments by Fleet Space to expedite the discovery of globally significant porphyry copper deposits, noting that similar efforts have already identified large targets in neighboring areas. The combined data will guide maiden drill testing, with surveys starting in early to mid-August, depending on conditions. AngloGold can earn up to an 80% stake in the project by investing up to $50 million. Evion Group secures graphite supply amid global shortage. Evion Group's joint venture partner, Panthera Graphite Technologies, has secured an agreement with Technographite to acquire 1,000 tons of graphite concentrate, including large and jumbo flake variants with high fixed carbon content, to address production needs for the remainder of the year. This move addresses the global shortage of graphite concentrate exacerbated by China's recent export restrictions, which have driven up prices and contributed to supply issues. Evion Group, with a market capitalization of $7 million, is finalizing sales pricing and terms for short-term supply and expects this agreement to support its ongoing growth. Managing Director David Round emphasized the importance of securing a reliable supply amidst the current market challenges. Panthera Graphite and Evion Group are also negotiating terms with existing buyers for their expandable graphite products, anticipating that the pricing will align with forecasts. Further production and pricing details will be provided in the company's upcoming operational report.